Happy Monday, everybody. I hope you had a great weekend. Today is June 13th, 2022, and this is your Monday market update. Another pretty tough week to swallow, so I want to recap last week's action and the outcomes, look to what we'll see this week, and talk about some possible plans of action. I'll remind you again in a moment, but remember, the reality is that every action depends on your individual goals, so please don't interpret the action ideas as being for sure for you. Let's talk about it. Let's see if it works for you. Last week, by the numbers, for the week, the Dow was down 4.5%, the S&P was down about 5%, and the NASDAQ was down about 5.5%. So let's go back a week and let's do a quick recap of the daily action, and we'll go from there. Monday started with hopes of green markets. Stocks gapped higher on news from China about they were easing some lockdowns in major cities. And while the news was about easing lockdowns, news was also reported that the Chinese government was easing the pressure on Chinese tech companies. No major catalyst, though. We've been talking about China as one of the three main that we're watching, Fed and Russia being the other two, but there was no real conviction, so the stocks gave up their gains as bond yields were relentless and moved back over 3% for the first time in over 2 weeks. By the end of the day, the Dow was just up a hair, the S&P 500 was up 0.31%, the NASDAQ up 0.40%. As far as recent markets, a lot of movement for not much at the end. We went from a gap higher on Monday to a gap lower on Tuesday. Reaction to the global growth fears. The World Bank lowered growth expectations again. Add in another Target company, profit warning. If you're looking for sales, time to check the racks at Target. They said they're going to have to mark things down to move the inventory to get ready for hopefully more desired inventory. Not a lot of new news there, but more bad news from Target. Aside from that, as I've mentioned, the bad news needs to go away. But until we get good news, we're not done. So I set you up on that. By the end of the day, the market's reversed. The Dow was up 265 points, the S&P up 40 points, and even the NASDAQ was in on the action, up 115 points. For the second day in a row, stocks gapped lower on Wednesday with eco news from the ECB, as well as IMF chief economists cautious comments about the overall economy, even SEC chair working on rules to level the field overall. Markets did move, but with some stability as they awaited the CPI report. By the end of the day, the Dow was down 270, S&P down 45, and the NASDAQ down 90. For those of you keeping score, those down points were almost exactly as the points from the day before. So recall the quote from last week, sound and fury signifying nothing. Thursday, the stocks continued the Wednesday weakness as ECB was more hawkish than expected. CPI, we'll see that coming out on Friday. Lockdowns in China. Wait, reversing this again. Jobless claims even ticked higher. S&P 500 was down 2.33% on the day. Dow was down about 2%. The NASDAQ was down 2.75%. CPI report was there to take out all the oxygen in the room early Friday morning. Stocks opened lower as the eco report that we were all waiting for, the CPI, came in a bit hotter than expected. And that was really the last thing this market needed. Not a surprise to some, but the market is not pricing in. Prices continuing to go higher. We were starting to see the market price in peak inflation and then wait for things to start coming down. Oil, gas, food, services, airfare. Holy cow, have you booked any flights recently? The reported number was 38% up year over year. Let's finish a recap of the week. Even though we'd like to forget Friday happened, stocks dropped on Friday hard again, as we said. Dow was down 2.75%. The S&P 500 was down almost 3%. And the NASDAQ was down about 3.5%. Pretty broad sell-off. Nearly all of the Dow 30 were in the red. Apple, Microsoft, Salesforce, Amazon, Nvidia, Netflix, all big legs lowered. Banks and cyclicals were not immune. Goldman was down 5%. Boeing was down 5%. Just a quick recap. We've moved from the May lows on the hopes that the Fed will pause later this year and that China will stop the zero COVID policy and stop locking down cities and its economy. Both of these went backwards last week, so that's why the about face. Just a call, we're seeing this a lot. Does anyone else get the recalculating message from the GPS or the Waze when you go the wrong way? I know. I'm sure I'm the only one taking wrong turns even when I'm using Waze. Regardless, we seem to be getting a lot of that recalculating every other day. So this is just another reason to keep your eye on the goals. And if they're long-term, what should we be doing now? Two things, as I told you when I started today, they may or not be for you, but we should discuss them. First, if you have some losses on some of your holdings, let's talk about harvesting those losses in the taxable accounts so that those losses may benefit you in the future as you will hopefully recognize capital gains again sometime in the future. Losses now can help take some of that tax bite away. Let's confirm this with your tax plan and your tax planner. Also, if you have money on the sidelines, Consider the fact that if you have been looking for at watching good companies, but they were too expensive to buy, many of them are no longer as expensive as they were. So it may be time to take out that shopping list. By the end of the week, as I mentioned earlier, we had some pretty ugly numbers. What will this week look like? The key of the week will, of course, be the Fed. And with the blackout period, the Fed heads will be quiet, but never fear, we'll get a pre-recorded Brainerd video today. But rest assured, there will be no policy comments. We will see the Fed meeting Tuesday and Wednesday, the statement Wednesday at 2 p.m. Eastern, and then the presser to follow. This is always a day of fireworks, so stay tuned for that. We'll also be watching all of the eco data for hints of growth. Are we headed into stagflation conversation again? We'll see PPI, which we know will be pretty hot. Will it be cooling off at all? Remember, peak inflation is we're looking for peak inflation to show there. We did see hotter numbers show up in the PPI first, then we saw those trickle down to the CPI. So will we see that reverse? We'll just have to see. Also, retail sales, a bunch of manufacturing survey data, and even some inventory data. Now, usually inventory data is pretty dull, but note that the biggest news this past couple of weeks has been that retail has huge inventory, and the wrong kind. Heads up, we have too much of some things and still don't have enough of others, so we'll just have to see how that plays out. We'll also get the weekly jobless claims. Remember, they ticked up last week. Is that a trend? No more Fed head blackout, so we'll hear from Powell on Friday, and then Waller scheduled for the weekend. I'm sure next week we're going to get a lot. Next week we'll have a lot on that too. Today's starting out on the wrong foot, but as we've seen, will we recalculate today? We don't know. Keep an eye on the data and the Fed this week, and remember, we're dusting off the down market and inflation playbooks. As I mentioned a few ideas earlier, and we'll work through those. Also, check out Friday's planning video for more about the plans for this market. We do have plans. It's very important. Let's stay in touch. Let's stay nimble. Have a great week.